Welcome back to another 5-minute small business tips where you give us 5 minutes and we'll make you a better business person. I'm Stuart Goldstien, CEO and president of Goldstien Consulting. We are the small business specialists. I have a 35-year career working in both Wall Street and Fortune 500 companies, but for the last 24 years I have worked exclusively with small businesses. Today's tip comes from our book, Small Business Tips to Live By, and it is number 19 in the financial management section. And the tip: fixed expenses are the death of a starting business. Now we're going to go through this in depth, but first, as always, let's define our terms. Fixed expenses. Fixed expenses are those expenses that do not vary specifically with revenue. That is to say, an additional unit of sales does not increase these type of expenses. We call these expenses fixed just for that reason. When we make more sales, these expenses do not increase. Typical examples for small businesses of fixed expenses are salaries and benefits, marketing, rent, company insurance, office management, supplies, utilities, and travel and entertainment. Each time we make a unit of sale, none of these expenses increase as a result of that sale. This is in direct contrast with variable expenses, which do increase every time we make a new unit of sale. Let me introduce a new term here: performance-based compensation. Performance-based compensation is when a supplier of some good or service is paid based on achieving certain results. Most commonly, it is related to payments made to employees or consultants based on sales they made. We call these commissions. As a result, some of the fixed expense in this category of the salary is now made a variable expense because it is tied to the results that are achieved. If there are no results achieved, no payment is made. Thus, it is not fixed. However, it can also apply to suppliers of certain goods and services, where the payment for the good or the service is directly tied to the performance. In certain instances, we pay our suppliers of certain goods only based on how much we sell of those goods, so the payment is based on performance. Here is the key point to understand and remember. For a small business, fixed expenses have to be managed to their lowest level possible. We must understand that we have to pay our fixed expenses irrespective whether we have sales or not. If we make no sales, we still have to pay salaries. We still have to pay rent. We have to pay insurance and utilities and supplies. This is especially true with new and beginning businesses. The importance of managing our fixed expenses to a low level and moving more of our expenses to variable expenses that are tied to sales can be the difference between survival and ultimately cash flow death. So what can we do? We need to emphasize performance-based compensation wherever possible. This includes with our employees and consultants, as well as our suppliers of goods and services. We can always be trying to negotiate variable rate, usage-based programs, and compensation-based salaries. All of these can help us greatly in tying our payments to our sales and allow us to harvest cash until we are achieving sales that are sufficient for survival. So in conclusion, we need to manage our fixed expenses to the lowest rate possible because they can be the death of a new business. That's all for today. Please stay tuned for the next video in our series. And as always, please like, follow, share this video with anyone you think it can help, and please subscribe to our channel so you don't miss the next video in the series. If your small business has any issues it would like to discuss, please feel free to contact us. Our information will be in the video notes. And as mentioned, our book, Small Business Tips to Live By, is available on Amazon in Kindle ebook, paperback, and hardcover versions. This has been 5-Minute Small Business Tips. We'll see you again in the next video.